Have you ever looked at a stock chart and just your eyes glaze over? It looks like a total mess of squiggly lines and colors, right? Well, the good news is, it's not chaos. It's actually a language. And today, we're going to learn the very basics of that language.
I mean, look at this. It's pretty easy to feel overwhelmed. Your first thought might be, okay, this is completely random. It's just unpredictable noise. And that's really the big question we're tackling today. Is there any method to this madness?
And here's the secret. It's absolutely not random. Not at all. Think of it like a story being told in a language you just haven't learned yet. Once you know a few key words, the whole picture starts to come into focus. So, let's get you your decoder ring. So, where do we even begin? Well, the very first, and honestly the most important thing to look for is direction. If you strip away all the complicated stuff, every market is really only ever doing one of three things. Let's break them down. Okay, here are the two big ones. Side by side, you've got your uptrend and your downtrend. And the definition is actually beautifully simple. An uptrend is just a pattern where the peaks get higher and the valleys get higher too. And a downtrend? You guessed it, it's the exact opposite. Lower peaks and lower valleys. Let's use an analogy to really make this stick. So, an uptrend is basically like climbing a set of stairs. The price goes up a step, then it takes a little breather and comes down, but, and this is key, it doesn't go as low as it was before. Then it climbs up to a new higher step, higher highs and higher lows. It's that simple rhythm. Step up, rest, step up. And a downtrend? Well, if an uptrend is climbing stairs, a downtrend is like sliding down a slide. The price drops, it might bounce up a little bit, but not back to its old highs, and then it slides down again to a brand new low. Lower highs and lower lows. A clear downward path.
But of course, the market isn't always doing something so dramatic. It's not always climbing or sliding. Sometimes it's just stuck. And that's our third direction, a sideways market. The price is basically bouncing around between two levels, not really making any progress up or down.
Okay, so once you can spot which way the market is heading, the next thing to look for are the boundaries. You'll start to notice that prices often hit these invisible walls, and we have a really simple way of thinking about them, the floor and the ceiling. This is the perfect way to picture it. Seriously, imagine the price is like a bouncy ball inside a room. It hits the floor and bounces up, it hits the ceiling and comes back down. In the world of charts, we call these support and resistance.
Support is the floor, so as a price is falling, it often hits a certain level where it just seems to bounce. Why? Well, it's because buyers see that lower price and think, hey, that's a good deal. They start buying, and that demand supports the price and keeps it from falling any further.
And resistance, you can probably guess, is the ceiling. As a price is climbing, it often gets to a point where it struggles to break through. This is where sellers start to think, this price is getting a little high, maybe it's time to sell. That selling creates pressure that resists the price from going any higher.
All right, you've learned the three directions, and you've learned about the floor and the ceiling. The vocabulary is starting to build, so let's do a really quick check to see how it's all sinking in.
So just take a second and think about this. If you were just starting out, totally new to all this, which of those directions, up, down, or sideways, would feel the most natural, the most straightforward to trade?
That's right, the uptrend. For most people just starting out, it's seen as the path of least resistance. The whole idea of buy low, sell high just feels a lot more intuitive when the overall direction of the market is already pointing up. It's kind of like having the wind at your back.
Look, theory is great, but the real learning, the real aha moment happens when you actually start doing it yourself. So now, it's your turn. Time to become a pattern spotter.
Here is your mission, and it is incredibly simple. Pull up any chart. Seriously, it doesn't matter which one. First, just try to identify the main direction. Is it climbing the stairs or going down the slide? Then, see if you can find a clear price level where it has bounced from below. That right there, that's your first support level. And this brings us to what might be the most important takeaway of all. We are not trying to be fortune tellers here. There's no crystal ball. The real skill is learning to be a kind of market historian, learning to read the story of what has already happened, because understanding the past is the only way you can even begin to make sense of the present. So you can now read the recent history that's written in these charts. And that leaves us with one final thought. Knowing where the market has been, how does that change what you'll be watching for next?